let me go ahead and share what we're going to cover on market profile. So the goal of today's class is that you guys will be able to understand when we start talking about market profile, and doesn't mean that you're going to become a proficient trader in market profile because of one class. If that's your expectation, then I think it's a wrong expectation, right? You cannot learn. This is not necessarily an indicator, but it's reading of the market data and a graphical presentation, similar to volume profiles. So if your expectation is like, hey man, I had this market profile class, and tomorrow on Monday I will be profitable trader, there's a lot more work and steps to it. Technical trading is important and knowing your setups, but the more important piece is actually your psychological, right? Yeah, no need to share. I'm just talking for a moment. What we're gonna cover today is the basics and some setups that we use in market profile, and then kind of talk about the psychology, right? Where a lot of you guys struggle is breaking the point from you understand what's gonna happen, but sometimes you guys take the trades that were just logically not there. And you took the trades because you were not patient enough and wait for the setup that you knew could happen. But since you took so many trades and let's say you lost a lot of money, then you're terrified to take the trade that actually you should take. So we'll talk about that a little bit more detail to kind of at least help you think about this. And I do suggest that you guys take the trading, Mark Douglas, Trading in the Zone. Do you guys read that book? There's also about 7 videos. I'll link them in Discord from Mark Douglas that you guys should listen to. Right, it's about 15 minutes a pop. I've listened to it. I've read the book quite a few times. Every time you read it, you pick up something else. So I suggest you guys do that. I will also cover some of the stuff that I do from the mental side. And then for a lot of guys that are, let's say full-time traders, most of us have a different hobby than just trading, right? I know that's a full-time job, but once you make your money, most people have something else to do to distract themselves and spend their time elsewhere, because that's the purpose of trading, is that you don't have a boss, right? And you can do whatever the hell you want after you make your money. So you cannot do market profile or volume profile if you guys don't understand the market auction theory. We're going to cover that today. Market profile introduction, developing value, key levels, environment, data types, and details. So the key levels that I think should be exchanged for setups. There are certain setups that I look for in market profile when it's generating information for us during the day or day to day. So it's important that you guys see that, right? And it's important that you guys recognize the MGI, as they call it, market generated information, at the time it's happening. It's a lot easier as a trader to talk about a trade or a setup the next day. But can you do it live? And execute it live is what separates kind of good and great traders. Okay. So with that being said, the stock market is just a two-way auction, guys. There's not much more to it. There's sellers and buyers, right? There's never more sellers than buyers. In order for me to sell something, I have to have a buyer. In order for me to buy it, somebody has to sell it. And this is basically, I don't know, I keep bringing up, if you go to flea market, we have one here in Atlanta that's pretty large, and you go there and some people, will ask, hey, can I get this for 10 bucks instead of 15? They'll try to negotiate the price. And that's what stock market is, right? As you auction higher, let's say we're at the top and there's no more buyers, not a tick higher, right? That's a concern, right? Nobody in the stock market believes that we can get more for whatever we're offering, right? If it's 6,000 on ES and not a tick more, well, that's telling you there's no more buyers at these levels and they're going to look to auction lower to find them. So the stock market is really probably the best market auction that you can have in our reality right now. It's efficient, right? And it works. Doesn't mean it's not manipulated, not necessarily. I mean, manipulation happens to fill in the orders of the big boys, of institutional traders. Institutional traders in the market auction can't participate like we do. On a retail side, when you guys go along 1 or 2 ES contracts, what's the odds of you getting filled immediately or pretty good. But when an institutional trader is trying to buy 13,000 contracts, they can't just hit market buy on that, right? Most of the time, they're responsive traders. They're looking for levels and they don't just move their levels to buy or get in. They wait for the price to reach that level. Hence, they're called responsive or passive buyers or sellers. Once it reaches, that's where they start buying or selling. So in the market, auction theory, the objective of it is just to facilitate the trade, to make sure there's liquidity and that they match the buyers and sellers. When you match the highest bid with the lowest offer, that's when you get a transaction that's executed. Now, when you look at under the covers of that transactions, you can find out if that was an aggressive seller or, aggressive buyer. And that's what we do on the footprints and order flow, right? We look at the details of the auction theory, kind of take the candle and break it down under and see actually how did it get there, right? If we hit the top and auction is completed and then you see aggressive sellers, on the bid side, well, somebody's, not if they're asking $50 for something, they're accepting 48. That makes you a little bit of an, aggressive seller. You're looking to get rid of your inventory as quickly as possible. When shifts happen between balance and imbalance is the key point that you guys have to consider when you're trading market profile, or if you want to change your behavior on how you look at stock market. Is the price being accepted there or not? And when you think about balances, right, that means the balance indicates the price is accepted and everybody's happy trading in there. And that's where short-term traders, right, for like me and yourself, they really like trading. Like when we had the 2-week range recently, the bracketed market, it was really good to trade. And, you short the tops or you fade the tops and you buy the bottoms as we auction lower. And it worked quite a bit. Right, I think we hit the bottom like 3 times, the top maybe 5, 6 times, and it worked pretty much every time. And then, recently, I think it was September 3rd, where we auctioned lower. Hold on one second, guys. Where we auctioned lower, and that's, that was the start of an imbalance. And now we are watching to see, are they going to try to reject lower prices? And of course they didn't. They had a follow through to that. They consolidated for 2 days and then they continued lower. Typically, when you break out of a balance, doesn't mean you're just going to, dump all the way. They might stop at certain levels that were interested before where there was some balance. And if they don't stop there, the first time they break out of a major balance, there's usually more follow through to that, and that's kind of what we're seeing now. What you need to get out of this, at least out of this slide, market goes balance to imbalance, and then it's about price acceptance. Are we accepting or rejecting that price at that level? And we can use market profile, volume profile to kind of put the visual around it to see what's true, what's not, whether it's accepted or rejected. So here's the graphic. You guys have probably seen this before that when I created this. Let's say we are placing multiple bids, like we want to buy something. This guy has a lot of offers. The lowest offer that he has that he's willing to sell and the highest bid that he's willing to pay is going to be matched by the dealer, right? And the dealer is going to take a certain percentage of that. And the more he can sell like this or sell lower, buy and sell higher and buy lower between the dealers to the next person, right? That's how they make money. The dealers are not in there to make profit. They have to be delta neutral at all times for the most part. And so basically they're looking to play their side and collect transaction volume. Once the order is matched, that's when you can figure out who gave in. Let's say that this guy was 50 for something. This guy offered 48. Well, are they going to have a trade? This for most of you guys. No.
No, don't see how.
I'm asking you for $50. You're offering me 48. Well, the only way the trade can happen is how? If I increase that bid or if the guy that's selling lowers the price. And it's like, if you guys have been on Facebook Marketplace and you see a lot of those jokes where it's like, hey, my wife is selling a $10 thing and I have to meet a random guy in the parking lot just to get killed for $10, right? So that's kind of like in the market, right? When you're selling something for $50 and they're offering 48, transaction doesn't happen. Now the question is the seller going to become aggressive to get rid of that at $48? If he is, and the bid stays the same at $48, you're going at a match. And what type of seller do you have? A passive or aggressive?
Aggressive.
Yeah, that would make him an aggressive seller, right? If I was an aggressive buyer, I would have offered 50 and I would have gotten it right there and then, right? It's almost like when you guys think about, I don't know, eBay way back. Remember how it had that buy now button? I don't know if it does now or not, but you could do the auction, or there was a level you can buy it now and you pay the premium the guy is willing to accept. That's the same concept, right? You can go into auction, right, where you're fighting with other participants, or you click buy now and you got it. And that's equivalent to what? In stock market.
Being an aggressive buyer.
Yeah, just a market buy, right? You hit the market buy, you're in right there and then. The price is not guaranteed. I've had in my, options trading career, I got destroyed by Shopify. Like I got so badly destroyed by Shopify options that I never traded shop options ever again because of the market buy and market sell on those, right? It was a pretty bad, painful transaction that I had, and I never again took any market buys or sells on options on like very illiquid stocks. So you want to be careful when you're entering. ES is pretty liquid, so market buys are usually good, unless volatility is there and then you have slippage. That's when it can get a little nasty, especially on NQ. Does this slide make sense to all? Any questions?
Nope.
Okay. So the market, and you guys see this a lot. Market goes in the balance, and we are trading here. Then they break it out. They go in imbalance. Sometimes people call it markup, trend, whatever you want to call it. We agreed on price here. We no longer agree on this price, and now we're gonna go higher to see of search of buyers. Once you go higher, what we're trying to establish is value higher, right? If they can stop here and start building value, right? And anytime we dip to the bottom of that bracket, they show up responsive activity, there's a good high chance the prices are being accepted higher. Let's say we auction lower to the prior breakout zone, right? Let's say this was our zone and we were visiting here. This is where the fight happens. If we fail to hold this level, that means the price is higher or what? Rejected that, and most likely, I'm telling you, 80% of the time, if these are rejected, there's a chance you're going to go to the range low to look for buyers. What they want to find is that they want to look for buyers at the lower levels. We auction higher in search of sellers. We auction lower in search of buyers. So when they go to the bottom, we are expecting from this prior bracket that these value buyers are going to be there. Those are responsive buyers, right? So now when let's say you're auctioning here and we peak above like we did here, what would you expect to happen in a bracketed market here? Who should be there? What type of buyers or sellers should be there?
Sellers.
Responsive.
Is that expected or not expected?
Expected.
Okay.
The initial seller should be there. I mean,
Go ahead.
can you hear me?
I can hear you now.
I was saying, initial buyer should be there if it's gonna go higher.
Yeah, but is that expected behavior or not?
No, it's not. No, it's not.
Okay, that's not an expected behavior. When you're in a bracketed market, the way you trade bracketed markets is that you're looking to become part of a responsive crew. Response, response. Responsive buyers, responsive sellers, right? Buying above is initiating, means that you're trying to drive the price discovery to the new level. I particularly don't like doing price discovery on my own, and you guys will hear me in Shorty's Corner or Trading Live. Let them do that discovery. And in the past, I think it was 3 days when they did the price discovery above the value extremes, what happened? Did that unexpected behavior play out?
Nope.
No, on I believe Thursday when we auctioned, or Wednesday we auctioned 64. We failed and we visited the poor lows that they left intraday that day. Yesterday, or yeah, I believe, I'm sorry, not Friday, I forgot. When we went above, it was the same exact setup, like identical setup, and I explained it, in the watch list and live. They're gonna go above, and if they can't hold it, there's a high chance they're just gonna continue lower. Because now you're in a downtrend, right? We had the balance of 2 weeks, and now you're auctioning lower. Unless they can close 2 days in a row inside of value, that means the auction is what? So if we had 2 days of selling, and then one day we have a D shape, the next day we close inside the D shape, what does that tell you about the auction floor?
They're
Slowing
accepting.
down.
It's slowing down. They're taking a break, right, from selling. That doesn't mean what? Does that mean we're bullish?
No.
How would you turn bullish? How would you know to turn bullish?
If they broke the range consolidation high and held it.
Okay, that's good. Or framing up is taken out. So you want to see the
Yep.
reversal in the day-to-day trend. Instead of us framing down, making lower lows, maybe we make a higher high on the daily, or let's say you're in a lowercase b profile and you break the value area high of that. Typically, those drive a short cover rally. And they tried, but they failed miserably 2 times, right? Where both times they tried to peak above value area high and they failed, and we continued in the opposite direction, okay? So now that you guys actually answered all the questions correctly, here are your answers. Selling above, when you're in a bracket, selling above, it's responsive. Buying above is initiating, and you want to be careful, to go here because there's a lot of look above and fails in bracketed markets, right? And why do you think they do that? Why do you think they're like, hey, we're gonna go higher, and then they fall back inside?
Testing.
Sweeping liquidity.
All about liquidity, right? They grab your liquidity here. So let's say you go, people jump in long, and what happens to them?
They lose money.
Yeah, these guys sell it to them, and these guys are like, oh man, I'll just buy more here. So they buy more here, they buy more here, they buy more here, and then they're like, oh shit, let me go short. So they go short here, and what happens to them?
They get clapped again.
Then they're playing against, the trend. They're playing against what the value is. You should be buying below or a value, but what they end up doing is they start selling below the value. You don't want to sell below the value. You're looking to buy below the value. So selling below is initiating, buying below is responsive. So until that behavior changes for a trader, it's very hard to be profitable. And if you guys look at the monthly profiles, for instance, for July and August, you will see in the August where we rejected multiple times at the top, and we'll go over it, but it's pretty clear that there was not enough net new blood to take it higher. There was some buyer exhaustion that we had in the 2 weeks that was clear. We had some poor highs inside the bracket, indicating that they're trapped at a wrong location. And then they auction lower, right? And that's what we are seeing now. We're not potentially done with selling yet, but you have to know where's the next big value that we can expect to find buyers, and that's exactly where you don't want to be short. And that's sometimes what people miss, right? They look at the small picture, they lose the sight of a forest because of a tree that they're looking at. And we're coming up to, and we'll go over it, but we're coming up to levels where you have to kind of scale out of your short positions. If you're in puts, longer dated, I'm in some October puts. I'm gonna look to close them, and then if they give me an opportunity to maybe go long, I'd go long for a quick catch, maybe 2 weeks out, 3 weeks out, and that's how you play the market. Usually the late people that get in, they're usually the ones that get punished, right? And we've seen people, stories where people buy GME at, I don't know where the stock went, let's say $100. And they're like, oh man, I thought it was gonna go to 1,000 because the guy on Twitter said, here's the case for 1,000. Typically, when you follow the masses, you end up with the masses, and you typically, I say, hold a candle for the rest of us. We'll come back to that point, but it will be a very long time before we do in some cases. Does this slide make sense to all? Any questions?
How can you tell if responsive sellers or responsive buyers are still at the bottom or at the top?
So typically the way we do that in market profile, does anyone want to answer that? Before I go into it, how would you know if in a bracketed market, when we go below the value, how do you know that they're there?
Footprints?
Footprints is one of them, but it doesn't have to be. How do you tell in the market profile way?
Buying tail or selling tail.
Buying or selling tails, right? So, and I'll cover that and visualize it. But usually the way you tell is when the price goes below, what do they typically do? What do
Maybe
other
big-
time frame participants look for?
Unfair value.
Unfair value or advantageous price. So when you dip it below and you get single prints, and then let's say the next period holds it, and let's say we don't go below, that's telling you other time frame participants join the crew and they're defending the level. And that's how we tell in market profile if they're there or not. And we'll kind of look at the 2 weeks bracket that we had and the breakout so you can see the difference. And another one is your volume as you're approaching those. Usually when the price hits a level that's advantageous to them, they have quite a bit of volume in a short period of time because they hit some of those limit orders sitting there. Do you think they buy with market orders here below the value?
No.
No. And they don't sell with market orders at the top. If they do, it's usually inside the value and they're trying to squeeze the last bit of their inventory out, right? And then they reload on the bottom and then they keep going. It's all about inventory and liquidation. I can get rid of my inventory here. I can buy it. And it's almost like in an example, let's say you run a business and you sell catalytic converters. I don't know where I get the idea, but here, there's a scarcity on rhodium, and you're like, man, I'm just gonna go and look for junk cars and get the catalytic converters, and I'm gonna get the rhodium there. If you get a bunch of rhodium and the price is going up, are you gonna save all your supply for rhodium for later?
No.
No, you're gonna try to sell as much rhodium and catalytic converters as you can at the highest prices. It just happened 2 years ago that those were a scarce item. And then people were caught, I don't know about you guys, but in Atlanta, people would go to CarMax dealerships and they would literally take out 300 catalytic converters in the night, and tomorrow they are millionaires.
Yeah, we had that here.
I'm telling you what to do for your job, but that's not the best job to do. But you hit the iron while it's hot. So when the rhodium was cheap, they accumulated, they bought the catalytic converters, price went up, they sold as much as they can, then they wait again, and you keep kind of playing the cycle, right? So, and I'll cover the market profile visual, how you guys can know that. I think we covered this slide pretty well. Balanced markets means fair value. That means if you look at even on volume profile, when you have those high volume nodes on the VRVP, the visual profile that I keep on the right, if there's a visual, HVN coming up there, what are the chances that we might stall in the auction there? Pretty high, right? When you have an LVN and you enter that LVN, is there a chance that we might find some buyers in the middle of that LVN because that was an aggressive point before? Certainly, right? And you would use some footprints there. But typically, if you're, below, between two distributions, high odds are that you're going to visit that bottom distribution and make sure that the buyers are still valid there. Because at one point we were in that distribution, and then we auctioned higher. Trendy markets like we are now, right? You're not looking for. We shouldn't be making higher highs on the daily time frames for you to go short. So recently, when we were, on the watch lists, we talked about value area low and the value area high of the day prior were matching, right? And we looked for those. I didn't say let's go, previous day high and look for a short. That would mean what about the bear trend? If I was looking to short previous day high, is that a good trend? If I have
it's
to,
continuing down.
No,
So if-
because it's reaching the same high as the day before.
Yeah, that wouldn't be an auction that, it's confident in selling. I would be looking to, you can fade those, right, when they look above and fail, but it's telling you that the auction would be slowing down maybe on selling. They shouldn't be going that far up if they're really in a trend down. You want to at least find the 50% and play those day to day and see, maybe they reclaim it from the fibs perspective. They reclaim 38.2 or value area low. They get back inside. Those are the behaviors you're watching to see if the trend is going to stall. And I'll cover how do you know when a trend is stalling in the market profile.
Shorty,
Okay.
do you find the PDH and PDL on RTH or ETH?
RTH.
Okay, thank you.
Mhm. So in a bracketed market, like I said, fair value, there's no clear direction. How do you know if there's other participants in a bracketed market? Somebody answered it, but I want to see how would you guys distinguish that? Who loves trading in bracketed markets?
Retail.
Retail, short-term participants love bracketed markets. They love ranges. Why? Why do you think people like, why do we like bracketed markets?
They're easier to read.
It's fair value.
Fair value. What about risk reward in bracketed versus trending market?
It's less risk, less reward.
Okay, so it's more probable
Yep.
to trade in the bracketed markets. Once you enter trending markets, there's a lot of unknowns, right? One is aggressive and you don't know when the aggression stops, right? You're disagreeing on price, but how are you going to find the fair price? Well, it's not like stock markets go up and down. And there was a clear example of this just recently. We went up, remember, we went to the lows. When was it? I think, I forgot the month. For some reason, I think it's October, but it's not. The recent lows that we had where we bounced, and we went, a couple of weeks straight higher. And then we had 2 weeks of balance, and now we are distributing lower. So maybe they offloaded all their inventory at the top, and now they're looking to find the value. Where's the value, right? I mean, you have to go on different time frames, day, weekly, monthly, to see what is next that's coming. And for us, August value area low, and I'll show you that guys shortly, is coming up in the stock market. So we'll take a look at that shortly. Trend is a divergence, a price away from value. So I think you guys, is anyone confused about this?
No.
Do you guys understand the price and value? If I'm going up, trending up, is the price chasing value or value chasing price?
Price is going ahead.
The value taking the price.
The value should chase the price. That's correct, right? Does everybody understand that?
Can you explain that?
Yeah. So how do you maximize? Do you have a business? Do you run any sort of business? Do you want to have a business?
Yes. I have a film
Okay.
company.
Okay. How much do you charge per hour for a film company?
I charge $200.
Okay. How can you maximize your profits in a film company? I'll be your consultant. How about if you increase it to 250 and your demand doesn't drop?
That'll be good.
That would be you maximizing profits, and what you would see is did the value catch up? Meaning, do people still believe there's value at $250 for your film services?
Okay.
So if you go to, let's say, $500, and people still call you and we're like, man, we really like your film services, and we think the value that you provide for $500 is amazing. What would you do next? Would you lower the price to 200?
No.
Okay, no, you would not. Let me give you a real example that just happened. I don't know, from 2020 to like 2023, the eggs used to be, if you bought range, depending on what you bought, but let's say 12 eggs were about maybe $5. If you want to buy the same range free, like organic range free eggs now, they're about $8 to $9 for 12. So what did these farmers and companies do? Not necessarily farmers, it was mainly the markets. What did they do? They gave the farmer probably the same price, they squeezed them, and then they're like, oh man, there was a virus for chickens, and we have to increase the price because of scarcity. And what do people do? People either bought the eggs, and what does that mean in terms of value and price? Just like your film. They accepted that the egg is worth that value of $9 for 12 eggs. If they rejected it, what would have happened?
Price would have went lower.
Eggs are perishable, right? So what will happen to eggs is that eventually the stores will have so many eggs with not enough buyers. What do you have to do when you have a lot of inventory?
Lower your price.
You have to lower your price to find what?
Buyers.
Yeah, to find buyers. And to me, when I go to the store, my wife's really annoyed with me, and I'm like, oh man, they must have an inventory full in the back. Right? We go and we look at stuff, and you guys know when my wife was pregnant with the dragon fruits, I used to post at one time during COVID, the dragon fruits were $20. And my wife's like, hey, I really want the dragon fruit. I was like, man, they don't have any dragon fruits. They ran out. And they didn't ran out. I wasn't gonna, even if I have the money, I will not pay you $20 for a dragon fruit. I went 3 days later and it was 2 for 12. And that's either I was gonna be an aggressive buyer at that level and I would accept the value of a fucking dragon fruit's $20. Or I'm just gonna say, okay, well, you're gonna get oranges today in front of dragon fruits, and I'm gonna reject that price and I'm gonna find a different good. So that's the how you maximize profits. And in your example, if you kept increasing price and your profits and revenue kept climbing, that means your value and price value is catching up to what you're asking for in terms of price. If at one point you put $1,000 and nobody called you, you would know what the services that you offer, right? The value that you offer does not equal the price you're asking. Does that give you an example of why and how?
Yes.
Okay. Bracketed ranging markets, auctions back and forth. So I think I covered this. I do like trading brackets a lot, especially when it's, you know, more than 3-4 days. In the past, I would say 4 months, if you guys look, usually the 4th day was the breakout day. When you see it going longer, we can continue going longer. It doesn't mean the odds change. It's like flipping like coin, you know, it's either heads or tails. And until it doesn't work, then, you know, is there a high chance you're going to fail in the bracketed market at least once? Well, I mean, every trade you have a chance to fail. It's not like we know the direction of it. But in the ranging markets, there's a high chance you can, you know, trade the tops, fade them, you know, and look for opportunity to buy a POC or close a POC and then, you know, buy below the value and look to drive the POC. When I entered October SPY puts, do you guys know why and where?
At the top of the value.
I got the cheapest price on that contract for that day. I waited for them to peak above. As soon as they cracked the line, I bought 2 months of time, and I protected myself with time, paid a little bit more, and I was able to, you know, how would I know if that failed? Is if they broke my level, right, where I bought it, and then they made higher highs, and they closed the bracket in the opposite direction. That would have been, okay, well, that's it. That happened to me a month ago on similar SPY puts where I lost, right? But I recovered by using, you know, again, same setup. This time it worked. Am I upset that the last setup didn't work? No. I mean, you know, if you have the stop loss in place and you know what you're expecting, then why would I fight the 51% of the market? They're telling me you're wrong. You just take your trade, you're off, you lost the trade, then you move on. That's the bracketed market. There's a lot more risk and reward on the trending market, but if you're caught on the wrong side of a trending market, your losses really amplify really, really fast because the market's moving. They're looking for value. So they're not going to spend time anywhere too long to find that. And that's where a lot of accounts are blown, believe it or not, is on the trending market, not necessarily on the balanced markets. The two questions that you guys need to kind of start asking yourself, and Gator got much better at this, is which way is market trying to go? And is it doing a good job to attempt to go that way? The second question has a way you should answer it. Does anyone recall? I covered it live, I believe, Thursday and Friday. How do you know it is doing a good job of getting there?
Value area placement, value area width, and volume.
Those are the three components that tell you how are we doing, right? Are the value areas overlapping? Do you want to see values overlapping when you're trending?
No.
No, you want the value to do what? In relation to price, what do you want it to do?
Shift.
You want it to chase. You want it to chase the price, just like we talked about film. We want your price to go up, but the value to catch up with it, right? If you consistently, charge the same price and you got a lot more demand, would that be smart business decision?
Nope.
I mean, that would be, think about it. Let's say you open a restaurant, like, let's talk about Chipotle. I don't like Chipotle, they ruined it for me, but think about this. They started off as a burrito stand. How many burrito stand have you guys seen before Chipotle? Have you guys ever been somewhere in a big city and they had street food and they made burritos for you? Or any street food?
Yeah.
Yeah. But Chipotle did something, they standardized it. Right? They came up and they're like, hey, you can get similar burritos and you can get the ingredient. Can you not make the same burrito at home as Chipotle? Do they do anything specific? Do they have a secret sauce?
I don't know about Chipotle, but I'm in the burrito business, and you can't get mine. You can't make mine at home.
Well, okay. I'm glad you spoke up. You do something differently than Chipotle. Why do you not have a company that's $2 trillion?
We were starting to branch out, but it's just too much work, man.
It is too much work, and what you need to do is you have to, in their case, right, you have to raise funds, then you have to put a plan for franchising, it's a lot of work, and eventually it pays off, but it's how much you're willing to put. And for you, for instance, let's say, can you charge $25 a burrito right now, like Chipotle?
No,
What will happen to your, customer base?
they'd be gone.
They'll be gone. But people still go to Chipotle. I mean, the burritos, the other day, my wife was like, hey, if you want a burrito, and it was $17 for a fucking burrito. Add the guac, it's like $7 for guac alone. Add this, and then you get 2 pieces of chicken, you double the chicken, and it's like, boom, $20. But people are still paying, and therefore they're accepting the price, and they're just going to continue going higher. Okay. The bottom question, and you answered it correctly, is you want to make sure your values are shifting with the price. That if you're going higher, that they're stacking. As soon as you get a little bit of overlap, and you're, let's say you find the value area high that's inside the prior value area high, that becomes a really, really good resistance zone for look above and fails, and then most likely the market's going to auction in a different direction. As soon as the framing down starts, then you can look for some possibilities of reversal, right? All right. So far, so good. This was mainly your market auction, your participants, and difference between balance and imbalance. Are all of you guys up to speed? Is there anyone that's like, okay, what the fuck did I just hear? Okay. All right. So market profile is, I think it's a fairly simple graphic of what the market profile is giving you intraday, right? It was invented by Peter. I do have some classes from like 1985. And I think it would be a good time to release the next set of tapes for you guys. So I'll do that shortly with Rockets, where we released 3 tapes, and I've gotten some messages that you guys are done. What I want to see is that we start building kind of community notes that you guys can start talking about the tapes and what Peter was talking about in those classes. And you guys, we can all meet and discuss them, right? And I think that would be beneficial to all of you. So I'll release the next 6 tapes for you guys so you can have 9 total tapes and there will be 9 left after that. But I think it's important that you guys take notes and share them. And if you don't want to share them, that's fine, but at least take notes for yourself so that way you can reference them, and then when you see it live, that it makes sense. I would say this TPOs are really is not an indicator. What I get out of TPO is that it tells me market information differently. It tells me, you know, if there's any aggressive buyers or sellers. Are they distributions that they agreed on? Are there people that are coming late in the day trying to drive the price one way at the closing price? And then is there business that they didn't finish, right? And how do I trade that based on the date types, on volume? That's what, you know, market profile or market generated information. Sometimes you guys will hear me say MGI, that's what it stands for. That's what it's really telling us. It doesn't tell me to buy or sell, but it gives me the patterns and the setups where I can place my, you know, buys or stop sells there. Okay. Let's see. The 3 components of market profile is price, time, and volume. A lot of you guys, I feel like some of you guys have been confused between time and volume. It's like, which one do I use? Well, I use both of them. I look at both. You can chart either way you want. When I chart TPOs, I use RTH. When I chart volume profile, I use ETH. The reason being is when I'm looking at volume, sometimes it's known that they come in after hours and they release a lot of volume until 4:15. Volume profile would catch it, right? Does 15 minutes mean much on market profile? After hours, probably not, right? And that's why I don't entertain anything past the cash session for time profile. On volume side, yeah, it can happen. So therefore, I look at all of it, especially on longer time frames. You know, whether it's weekly or monthly, I pay a lot more attention to that on ETH as well. Price. This is your discovery tool. You know, just like we did, you know, discovery tool for film. We went from $200 to $500, and you're trying to see if that price is going to be accepted or rejected. And the way you would know if you're running a business is your revenue and your quantity demanded for the service or product that you're offering. If you see that your price is, you know, not getting accepted, and let's say you see that there's no more customers, well, you screwed up a little bit and you're going to have to go back to equilibrium or fair price POC, and you're going to have to find, you know, some new buyers at those levels or previous buyers. Okay, any questions here? Okay. So here's where we kind of start, and this is where I lose a lot of people, right? So hopefully I don't lose a lot of you, but this is where market profile basics start. And if you guys are confused at any point, when I say you guys know that I give you guys 101s for free and unlimited. If you're gonna have a 101 to ask me what is a selling tail, it's a waste of my time and your time. And I'm not trying to be rude, but that's not going to make you, you know, you can ask me questions here in main chat, especially if you're new. I promise in this group, and we don't have a lot of members in this Discord for a reason. We limit, you know, how many people can join per month, and some people leave, which is normal, right? Maybe they don't get the value what I provide, and they look to find it elsewhere. That's okay. We keep it tight and small because there's a lot of traders that are alike, and we pretty much trade the same levels. A lot of guys, a lot of times when I would ask you guys, most of you guys answer what the level is coming up, then you'll see Mr. Bean or Beans or Millionaire from Apex, that he would have the levels to a penny identified, and then he would go off in the sunset shortly after, pointing out where he took short, or Knowledge Seeker. A lot of traders will help you if you ask questions. It's almost like school. When you guys are in school, if you're sitting in the back and you have no clue what the fuck's going on in the class, if you don't ask questions, do you think you're gonna walk out of that class with a good grade? Probably not, right? So don't be afraid to ask questions. We're all to help. We have people that are really, really profitable. They've done this before. There's people that have been a market maker, that worked for hedge funds in the group. So don't be afraid to ask questions. Unless it's Burnside, he will not answer. He'll block you. He won't talk to you for a long time. Okay, so let's start with the top, right? So I want to make sure that you guys understand the periods, right? When you guys see these letters, a lot of you guys probably like, man, I'm going back to chemistry, physics class. No, it's fairly simple, right? When you think about 30 minutes, each 30 minutes denotes a letter. So we start from 9:30 to 10, that's period A. So if you look anywhere where price auction to in terms of price here, letter A is going to show up, right? So if the range is from, let's say, 2,000 to 1,000, that's where price went between 1,000 points. Letter A is going to be there. Well, let's say the letter B comes in at 10 o'clock and it goes 2001. Well, you're going to have a little, let's say, a B above that A, and it's going to be because they auctioned one level or tick higher, let's say. And same can be there. If it auctions in between A, then you're going to have a B matching A, and it's going to be right next to it. So like you see here, how you have the A goes all the way down to here, and then the B went higher. I'm just looking here slowly on the picture. And then you can see, F was above and so on, right? And you can break these letters in a non-consolidated way to see that. But each period, 30 minutes, is a new letter. The last period for the day is M period, and I'm pointing that out because that drives spikes. And there's a setup that we place, so just keep in mind the end period is just the settle price. You do not use end period for any of the setups, not even for the spikes. You only care for end period. So far, so good. Does everybody understand what these letters mean and how you visualize it now?
I do, yes.
Okay. Then there's components to reading the market profile, right? On top, you would have selling tails, or what's the other option you could have at top?
Single print in the middle.
At the top only. What you could have a
Or
selling
high.
tail or
Excess or pour high?
low.
Yeah.
so pour high at the top. On the bottom, you can have a pour low, like you see 3 periods here. If you have, for instance, 3 flat periods on the bottom or 3 flat periods next to each other, that's indicating that we have a pour high or pour low. That means unfinished business. There's a high chance we're going to revisit. There are differences in how the pour lows look, right? There's a crowded pour low, there's a non-crowded pour low, and they mean slightly different things in terms of auction, right? We'll cover that. But when you have 2 periods that are single, in this case we had 3, that means it's a selling tail. This indicates, somebody asked earlier, how do you know that other time frame participants or that they're defending the bracket? Well, let's say that this was the bracket here, right? On the top, the red line for shits and giggles. That would be other time frame participants hopping in and pushing the price down. Retail and short-term traders, they do not have necessarily the, let's call it, money to put so much selling pressure to push the price down. Usually those are large limit orders sitting there and market buyers come in, and what happens? I have a large order that's selling here and I keep hitting market buys. That's kind of like an absorption, and they're not letting the price go past this level. Does that make sense?
Yes.
So this is a
What's the
selling.
difference? Sorry.
Mhm.
What's the difference between the selling tail and excess high?
That's the same thing.
Okay.
Selling tail, access high, or unfair high is the same thing. Buying tail and buying access and unfair low. Why is it? Can anybody explain why would we call it unfair low? Why is it
Oh,
unfair
Unfinished
low?
auction.
It's unfair because the other time frame participant is taking advantage of the price at that moment at that time.
Below value, right?
Yeah, the price was
Right.
went to the level that it's unfair to be at that level. If you guys, the other day, I had a friend call me. I haven't talked to him since he bought his Nissan Leaf like 20 years ago. He's like, "Hey man, you won't believe what's happening." And I'm like, "All right, it's gonna be some sort of saving because the guy is so frugal. Like he will wait for bread to drop 30 cents before he buys it." I'm like, "All right, what's going on, man?" Like, I got the same deal. I'm like, "What are you talking about?" We really haven't talked in a long time. You guys want to throw a wild guess what he's talking about? Hyundai, some kind of electric car has the same deal like Nissan Leaf, where it was $200 a month for a lease, no down payment, free charging. He's like, man, instead of paying for my gas, I'm gonna get this. I'm gonna park my car, not waste the miles. And I'm just gonna lease this Hyundai. I forgot the name of the electric car. But that's why he called me. And I was like, okay, man, that's really good to hear. And he was able to find that, and for him, the value was where? Buying that car and not spending money on gas, and he gets free charging. So when the price goes below the value, you're going to find the buyers, right? And that's called unfair because it's not a fair price. For $200 a month, I don't think you can find a car right now, brand new, for $200 a month. At least I don't think so. So when they dropped it, what does that tell you about their potential inventory?
Big.
They had too much.
They had excess inventory, so they dropped the price. Because if they didn't have excess inventory, would they have to drop the price?
Nope.
No, you don't do that. It would be stupid, right? Now you'll see a lot more promotions, maybe on cars, and soon they'll be followed by housing market, where you have incentives to buy. Okay, so unfair just means the price for that product or stock is unfair, and they came in and they snatched it up really, really quick at that price. If you guys recall, what was it, 2 years back when AMD dropped below 55, how long did it stay there? If you go back, it didn't stay very long. It was at 88 within 3 weeks, right? People bought it up, and same in the video, right? When they hit 105 before split, it went below. It was an unfair price for that company, and market's always forward looking, right? So when they look forward, it's like, oh my God, I'm just gonna buy this. So you bought Nvidia 100, you made 10 times that money in a short period of time. So that's the meaning of unfair. Okay. So selling tails, if you have more than 2 TPOs, like 1 and 2 right here. So let me make sure you guys are following. So this will be 1 here, and this will be 2. If you have at least 2 TPOs at the top that don't have a matching box next to it, that's considered a selling tail. That's a proper high, means they finished the auction there. Does that make sense? If, for instance, let's say there was a box that was right here, what would this, if there was a box that was sitting right here and it's letter F, what would this be now?
A weak high.
Yeah, that would be a weak high, or otherwise known as
Unfinished.
unfinished or poor high, right? So all of those are your definitions, right? And a lot of people call it different things, right? A market profile poor high is established when you have 1 TPO at the top, or if I had another F here, what would that be? That'd be a really good poor high. What about if it's 3 here?
Even better.
Yeah, it's a crowded poor high and so on, right? So that would be the poor high. And in this case, in the bottom, you guys see what we had in this example here. We had a poor low established by 3 TPOs. Typically, they tend to be revisited, right? Then for value area high, is there anyone that doesn't know what value area high and what value area low mean? This and this. Is there anyone that doesn't know? It's okay if you don't, because if it's something new to you, there's a high chance you won't. You guys make it so easy to give you a quiz. I think I'll bring back the quiz, the 100-question quiz for you guys, so you can take it, at least assess your knowledge.
I have a
Value area.
question about value area.
Okay.
Is value area high and value area low 1 standard deviation away from the POC?
That's correct.
And is the POC the mean or the median?
It would be the mean.
The mean. Okay, thank you.
Yeah. So if this is your POC here, that's your equilibrium, that's your fair price. Above here, what do you have? If 68% is here, then you know here and here below it you have what?
34.
Yeah, you would have 34% of time spent above, 34% of time spent below. When you total those, you get 68. So the value area is 68% of your time or volume that's traded here. So we know they spent 68% of the time inside this zone, right? And the extreme of that zone is called the high, value area high, and this one's called value area low. If you're not spending a lot of time below this price, what is it telling you about the price below?
Rejected.
Yeah, and same thing on the top. And how you reject it is important. If I was to give you this example, where's the price just based on what you're seeing here? Where's the price most likely to go next?
Down
Why?
because you have a poor low. It hasn't been, they need to expand farther. It's like an unfinished auction that needs to be addressed.
Okay. And what about the number of TPOs between here and here? Which one spent more TPOs? This one here or this one here?
Bottom.
If you just eyeball it, I would say it's the bottom. If you're spending more time below the POC, right, your accepting price is lower. Is that true?
Yes.
And you have a poor low, you have a selling tail here. So your market generated information, MGI, is giving you this. Is giving you, of course, the value, right? You have the POC and you have where you opened, right? And you still closed inside the value, which is the only thing working well for them. But then you have the poor low in the lowercase b profile. So the next day, what you would want to see in this case, I'm just giving you how I would play it, is how do we, if we are to auction, let's say we open above the POC here, and they go here and they fail, high chance you're going to come back and, fix this poor low. Okay. So far for that, I'm not going to go into details because we'll bring up the charts. So this is the value area extreme, right? This is your value area hold. This is your poor low. You can have a buying or selling tails, and then in the middle of the profile, let's say that these two were not here. What would this be here?
Single print.
Those would be your single prints that would be then separating the value here. And I added a slide to, and somebody asked me a question offline. So I added a slide that I typically want to see if you have a distribution that's like B here. I want to see the single print separating, but at least let it have 3 TPOs minimum up top and 3+ on the bottom. If you have 2 TPOs and then you have single prints, let's say here, did they spend enough time here to call this a distribution?
It's just gapping down. Sell off, basically.
Yeah, it's basically sell-off. They didn't spend enough. I want 3 TPOs plus to be considered some sort of distribution, zone on the top. Does that make sense? It was a good question by somebody, so I just want to make sure that it makes sense to all. If it's 2 TPOs, because sometimes you will see a poor structure like we had, you will have, a drop, let's say down, and there'll be single prints, and then there'll be 2 sets of TPOs, and then again, single prints, and they're like, well, which zone do I care for? I typically care for the first one on the bottom, right? And that was our short on 64 the other day. If you had single prints at 68, but how do I know that they're going to get 68? I don't. I have no idea that they're going to not go to 68. I know they tapped 64, and that was my first order, right? So that's how I trade that, or how I look at it. So you guys care to know. Any questions so far? Go ahead.
We have a queue exactly like that on Friday.
Yep. That will cover it. So selling tail, everybody good in what selling tail looks like? The buying tail would be the opposite. That means on the bottom you had this, and all the other TPOs are above. Poor low, if you have 2 or more, or if it's only 1 TPO, that would be a poor high or poor low. Value areas, I would say pretty explanatory. What is the mid meaning here when you guys see it on the TPO?
Half of the range.
Yeah, that's basically your half range. And market profile, we call that the halfback, right? Typically, they care about the halfbacks on weekly profiles and sometimes monthly because that helps them with the discount rate, right? Something's above 50% or below the 50% on the weekly, monthly, especially if you haven't revisited any of the halfbacks prior on a trend or trend down or trend up. Those become somewhat important, and that's where usually you look for some buyers or sellers, depending on where we are. Excuse me. Any questions that I did not answer when you guys see a chart and you cannot be like, man, what the hell am I looking at? Any questions from anyone?
I got a question on like for example, perfect example would be NQ. RTY or RTH, we basically have finishes M period. But we have a big long
yeah,
tail. It finishes on the M period. Right?
Okay.
And when I look at the charts, it's giving me an N period tail.
But you don't
So,
look at N at all.
Right. So basically we have a poor low for NQ versus having a tail. Right?
Unless it's a spike. I haven't looked. I'm not sure.
Yeah.
I
Okay.
can visualize. Yeah. M periods usually mean spike, so you cannot have access with M period. If you have a single prints with M, what
Right.
does that mean?
No, we don't. Basically the bottom is if you took off N, you've got G and J in NQ. So M doesn't even touch it.
Okay, well,
So
for a second,
I'm
so
just
I can
saying,
be on
yeah.
the same page.
But my chart shows like a tail, and that's why I'm getting a little
Good
confused
question.
about it.
Sure.
Good question.
I'm just gonna turn this on. For some reason, it always works. Here we go. All right. I think you're talking about this.
Yeah.
Okay. So what does this tell you guys? Let's look at it this way. I'm gonna split it.
Mine didn't have G. Okay. I must be using bigger ones because my G and J are the same. So
Yeah. So this would be a completed auction. And I think you can go as low as 5, if I'm not mistaken.
Why is that a completed auction, Shorty? It seems like it's pretty crowded down there.
I'm trying to see what the level I can see. It looks pretty crowded here between J and G.
yeah.
If that's the case, this would be a poor low. And
Yeah.
it looks like a poor low to me. Yeah, there's definitely a poor low here on this one. Where do we close?
We closed
This is
all
where
the way
you
up
wanted.
at 44.43. I'm seeing.
This is when you
Uh,
wanted that M spike down, but it never broke.
Yeah,
Yeah.
exactly. Yeah. Yeah, this is, I would say this is definitely, a poor low for me.
Yeah.
It's structurally looks good, but then look at this. I mean, here they're very close, and the M period I don't really count for.
I
But
feel like
yeah.
N they used to clean up orders or something
Yeah,
sometimes.
of course. Yeah. I mean, that's your closing 415, the settlement.
Yeah.
Because if you have it as ETH, you're picking up a huge long tail with N going all the way down.
Yeah, I think they did clean up ES as well. I don't know if you guys remember. I was looking for 401. They came in here after hours.
Yeah,
I
after
waited
hours,
all
they
day
drove it
for
way
all of that.
down too. Yep.
So yeah, I mean, this, when you think about these, well, I guess I have some spiked stuff here. If you think about, let me go here on NQ. I guess I can type today. If you look at NQ, for instance, here, it's pretty much leading the way, I would say, when you compare ES and NQ in terms of who was first. I think NQ at one point was, at the 4 months epoch way before ES.
Yep.
And this is what I was talking about earlier. It was identical setups that we played, right? And this one has a lot of setups that we're about to go in, so we can use it live as well. But here, you have the value area shifted, you had the POC matching the value area low. It's almost like you had this zone that was fairly important for them in this area, right? This would have been equivalent to what we had on ES, right? For this day here, they came in, they opened here and they went all the way above, right? They actually went much higher than I thought. I didn't look at NQ in a minute, but they did give you some nice setups here, guys, for this day here. I don't know if you guys see it, but you had some decent, single prints that came in here. They peaked above, and what is telling you about this distribution? Right, this is our distribution here, right? And you have a distribution below. We went first time here, and what happened? They said, nah, I think your prices should be lower. They peaked inside of it, and look what they did. Same thing, right? They sold it off again, lower prices. And now we are way below in the final and third one here. So if they can crack this, they're most likely do this tomorrow. Does that answer your question though? I get too excited about the setup.
Yeah, I mean, but even though it's a poor low, though.
Yeah, no, it definitely looks. I mean, it doesn't look like poor low when you look at it with the end period, right? But it
Right, with end period, it looks like you have a big
structurally,
long tail. So yeah, it
Yeah.
depends on what we open up with in the
so
morning, I
here,
guess.
if you look here, this looks pretty good for. And whenever you have a lowercase b like this, I like to know where is the value area high and low on those days. Because if you reject, let's say if you're able to crack this level here, this is where a lot of short cover rallies start. And if they start this short cover rally, they can really spike this fast to this level here. Like it would be pretty quick, right? They would probably go to the bottom of this one here and test, but these would be the two levels, and that's a lot of points, like 200, 400 points, right? So.
Shorty, what's your tick setting for NQ?
So for NQ on intraday, you want to be at least 6. That's what I use for intraday on NQ. And it's really hard to see, but it gives me the best levels.
Okay.
Same for ES?
No, not for ES. No, he asked for NQ. For
Like
ES
for
intraday, I'm usually 3, and then I'm basically going 3 to 1. So I'm typically intraday 3, and then I also mark levels on 1 to kind of get the realistic view on ES.
Okay. Thank you, Shorty.
All right, well, let's kind of go back. So any questions here regarding market profile, the letters?
How do the ticks work? That ticks per row thing setting?
Yep. What about it? So if you go
How's
here, it's basically, how much is one tick? Does everybody know? How much is one tick?
0.25?
Okay. So if you increase it from 1 to 2 ticks, what are you doing?
Oh, per 0.5 now?
Exactly. So you're just adding a 0.5 now that you're accumulating at price within this box. Each box is 0.5 now. If you do 4, what does it tell you about each box?
It's a whole point?
It's a whole point. That's what you're doing.
Gotcha. Thank you.
Mm-hmm. I knew somebody was going to ask
That's good to
me
know.
eventually. I was waiting for somebody to ask me. That's a good question. Okay. So market profile, just because I don't think I covered, because we had the selling tail on a prior one, and I had somebody ask me, they left the Discord. So you can't have a poor high. Like, okay, well, I fucked up somewhere. You can't have a poor high and a poor low. You can have a buying tail or selling tail. Buying tails occur on the bottom. Selling tails, like this one, they occur on the top. Single prints occur in the middle of the profile somewhere, right? So in this case, this was a buying tail, right? And this had a poor high. There's two periods that equal to each other, and then let's say we close wherever. Okay. And whenever you see buying tail, selling tail, that's typically other time frame participants are coming in. And when you're in a trend up and you get a massive selling tail, what does that tell you about auction?
It's exhausted the buying.
That the buyers met a seller. That those aggressive buyers met a really large limit seller. So when you think about that on, let's say on order flow, how would that look like on order flow? So let's say we're auctioning higher. I'm just giving you an example. We're auctioning higher and then this happens. And this becomes, let's say, single prints here, and we close with a lowercase b at the top. How would that look like on the bid and the ask?
A bunch of orders on the ask.
Bunch of orders on the ask telling you that this number here is large and limit sellers sit on the ask price at the top. Aggressive buyers are also on the ask. These are limit sellers. We call them limit sellers. And aggressive buyers are also on the buy, but they're usually, as the price is going up, they're trying to get there. Where are the aggressive sellers on the bid? On the bottom? Say it
At
again.
the top. At the top.
Yeah, aggressive sellers would be at the top. And where would the limit buyers be?
Bottom.
Yeah, you have limit buyers here, limit sellers, aggressive buyers. So you have a little bit of connection here. Does that make sense to all? We would anticipate to see on those selling, you would usually have on a selling tail, you would look for an inflated ask.
Yeah, when you have that stuff up, they're like red numbers. Do they mean anything?
Say it again.
When you have footprints up, sometimes there's like big numbers that are red. Either on does the color mean anything?
Of course, yeah. So it depends what you're doing, right? So some people depends on what your order flow is set up. If you have an imbalance order flow, right, setup, that means that this ask, let's say 300, and let's say this was 900, and price is now here. What color would you have where? Imbalance is compared diagonally price, right? Then you have a two-way, which is 1-to-1. They compare this way. Imbalance between order tells you that there's an imbalance between the orders, right? That's how they look at it. Level here and a level lower, and then a level here and a level lower, and so on. What color would this be? If the price is, let's say, here. What's the ratio between 3 and 900?
300%.
It would be 3-to-1, right? If you had 300 here and 900 here. So remember how we talked about the seller matching the bid? He was asking for, let's say this is the price here for 1,000 here. And this price here is 900. I was asking for 1,000, right? At this level. But then I sold, let's say quantity here was 300, but I sold a lot more 900 here. What does that tell you?
Aggressive, getting rid of it.
Yeah, somebody's trying to get rid of the inventory, right? Somebody sold everything here and they saw how they got there, and then they're like, oh crap, let me get more while I can at this level. And they lowered their ask, and they sold off a little bit.
So that would be red on that side?
Yeah, 900 would be red here.
Thanks.
Okay. I think I had some notes here for you guys. So other time frame buyers, when you guys see OTFB or OTFS, B stands for buyers. here. If it was S, that means sellers, and other time frame sellers happen on the top, buyers happen on the bottom, right? So in this case, this would be other time frame buyers. And there's a little bit of significance, just note that down. When you have, let's say, other time frame buyers or sellers in A or B period, they tend to hold their single prints. Especially if they are not excessive. Sometimes you guys will hear me say, man, that tail seems very excessive, especially if it's in the balance. When you see excessive tails, they usually mean traps are going to reverse and probably clean that up. But if it's a trend day, like we had Friday, we had some tails, right? And you look at it and it's like, okay, if you have a tail on the bottom in A period here, and then B period comes in and C period auctions below, what does this profile look like? Looks like a lowercase b. Do you want to see lowercases b in a trend down?
Yes.
At the bottom of it, yeah.
Oh, you want to see it throughout the auction. You want to see them not agreeing on the price here and pushing price lower. The next day, you want to see this. What you don't want to see when they break this is what? What if this happens? What would this tell you here?
Yes, it's stopping.
It's stopping, but this would indicate what? This little tail here.
Other time
Long
frame
term,
buyers.
yeah. Fine.
We found the buyers. And if you found the buyers and these people were short in a bad location, what do you think happens next day? So this is where you meet the two forces. Remember I told you other time frame sellers and other time frame buyers never meet? But if you have other time frame buyers meeting with the poor short-term traders on the short side, what happens to these short people that got in late? If you just got a bunch of other time frame people that come in on the buy side, the next day these guys have to buy to cover. And that's how you start short cover rallies. And sometimes you guys will say, and we had it recently, man, the volume is so low here and we just keep going higher, is because these people are weak shorts. A strong short will not be able to get hit on a stop loss quickly, right? If I shorted, let's say here, and my stop loss is way above, I'm like, I know what I'm getting and I know where I want the price to go. Well, in order for them to take this guy out, they have to go quite a bit of points, right? A weak short, let's say this happens like this. Their stop losses are here. So what they're gonna do is they're gonna try to grab that liquidity and then they're gonna start buy to cover. And a weak short or clueless short would be like, hey, let me short here. Because we're gonna go back. And what keeps happening, they keep taking their stops and they buy to cover and they keep going higher. That's typical behavior on stuff that can happen soon here as well. So left a poor high in process of price discovery. What happens the next day? I don't know if you guys, I didn't put a date, but the next day we came back, we went to the prior day value area low and we found buyers and they cleaned up the poor high. That's a normal behavior. In terms of market profile, and you don't have to be necessarily like, oh my God, what opening drive is this? Am I wrong or not? I'm teaching you this and I called them out as I trade live and I mentioned them. If it's an open drive, open test drive, open rejection reverse, or open auction, right? In terms of strength, when you're seeing an open auction, right? They're just going up, they're going down, they're auctioning back and forth, right? If you see an open drive, right, where it comes out and we don't make any lower lows, the price just keeps going in the same direction, that's probably the most confident one you're going to have. And we've had those recently on the sell side. Open test drive, what do you guys think that one is? Oh, it's telling you I open, test, and then I drive. Would this one been an open test drive? Let's say we open in this day where we had the P shape. We open here, we test the low, and then we drive. Would this be an open test drive?
Yes.
Yeah.
Okay. what would be an open reject reverse? Open rejection reverse.
You opened.
Same.
You
Same.
went.
Oh, sorry.
No, go ahead.
You do the same thing, but when it gets to the top of the value, it shoots back down.
Yeah, so it would be, you open here, you reject, and then you reverse and you break that low, and then you're going the opposite. These are tough, right? A lot of people don't know how to change the bias so quickly in an opening time frame to respect that. These can be hard to play because people want to fade. These are horrible to trade because it just looks like this, right? Open test drives can be my favorite, right? I like playing them if you understand the stock market. If we come to a value area low and a P shape, usually they find buyers and they trap the shorts here and then they reverse and they go. So those are good setups. But this is their strength in the order, right? And from here, you could probably attach the type of days you would have. What type of day would you have here?
A D shape.
Yeah, this would be D or sideways. What about open reject reverse? Could you have a double distribution?
Yep.
Yeah, you could open, reject, stay there, and reverse, and come back and build value lower, right? You could have that. And this usually can be extended typical too. Somebody's mic has like a weird, I don't know if you guys hear it, but it scratches the ears. And then open test drive, what would you guys think these are? These are your typically, you can have a B or P or a trending B shape. And then open drive, they're usually just these two. Uppercase P or B. Lowercase b. I'm sorry. P or lowercase b.
Are these in relation to like the previous day value area?
So when you think about opening drives, it's 4 levels that you care about. And it would be this plus the VA. Does everybody know what these are?
Open, high, low, close?
Yeah. So the ones that I care about is the RTH, like previous day high, and RTH low, right? Previous day low. PDL or PDH. I care for those levels, and then the value area. That's the ones I care for when I'm establishing where and what they're hitting or rejecting. And then, of course, if there's, let's say there's a July value area high, or let's say June value area low matching at a level, would I count for that? Yes. Like if there's a massive CPOC sitting right above it, and let's say we open here and the CPOC is sitting here, would I ignore this? No. Right, that could be the level we auction to, and then you open, you reject, and you reverse, and you break this. That would be this one. That makes sense. So the basics are these, but then when I look at other time frame, right? Let's say monthly profiles or cumulative profiles, then I look at see if there's anything in that area when we open that they can do that too, like open, reject, test drive it. Does that answer your question?
Yep, thanks.
Shorty, quick question. So on the open test drive, would that be mainly what we're looking at for like the 80% once they break the value area high or low, going back to the other side?
You can, yes. That's between these two, right?
Okay, gotcha.
You can both of these play. Usually they start off, if you guys remember the 4 opening types, if you open above the value but below PDH, right? This is where a lot of 80% happen, right? You open somewhere in here or you open here, right? Let's say this is PDL here and this is PDH. If you open here and you reclaim this, you might auction lower, right? Reject that and then go higher. So that would be the open test drive, right? But what if you come here, you reject, and then you crack this low? Well, that would be this one, right? And then you could potentially play that both ways. Depends where you're opening, right? Here or here. So yeah, these two usually drive the 80%. Open drive usually happens, you have a gap up above the PDH, and then you just kind of continue going in that direction. The buyers are strong, or gap down You open below and you just keep going. They usually do that. You want to see these two in trending days. These can be a little bit difficult, and I would say we can expect to see this maybe Tuesday or Wednesday.
Okay, thank you.
I'll explain why shortly. This is where you guys can make money. This is your, I would say, bread and butter in terms of market profile. There's double distribution, spike. Initial balance extension is not necessarily for you to make money, but it really gives you information of what the auction is telling you. Then you have the poor high, poor low, and then excess low, excess high. And these are the things that you can play and have, you know, entries and stops based around them, right? So starting with double distribution, right? Market is going to be always looking like we talked about price acceptance and rejections. When you think about double distribution, just like it says, it means that you agreed at one point here, right? And then let's say you no longer agree, you know, trend down, then you come here, right? That would be your uppercase B. That's your double distribution profile. So that's what this is. And if you're to visualize it, it just means a B shape. Once we auction away, we start balancing, consolidating, building value, which creates the second distribution. Then we look for single prints that separate the distributions. And we'll see the example, okay? This is exactly how I like to play them, and we'll cover that here shortly. So here's a, does anyone recognize this? It'd be cool if you guys did, actually. Does anyone recognize this price action? Nobody.
Isn't that last week?
This is just what happened, guys. This happened just recently here. Let me see where, I think I have the markings for you guys. So this is the spike base, but this is the profile that I'm showing you here, guys. It's the same exact profiles here. These right here. Okay. So how do we trade double distributions? Is you see that we have an upper distribution here, right? And you want to have two distributions, and you have more than TPOs, more than 3 boxes next to each other right here. And then you have 4 boxes on the bottom, just once, but you have 3. Is that fair? So you have an upper distribution here, and then you have a lower distribution that's sitting here. And then you have single prints that are kind of separating the values. The separating of distributions is the single prints. And that's I love playing this. This is one of my favorite setups to play. And can you guys imagine we took that short from 64, which was here. We took that short, and what did we target? See who remembers.
513.
I thought it was 505.
We targeted 516, then 3/4. Do you guys remember? That would have been the, you guys know what this level was? And there was a level here as well. Do you guys remember what that was?
Talking about
As
the
a
August first one?
Oh, this was just recent. This was the profile that I just explained. You guys, we have a really bad memory of what happens in the market. So let me just kind of bring it up. Just gonna increase so you guys can see it. This is kind of what happened there, right? It was what?
Like this.
Do something so you guys can actually see this. This was the day that we had the spike base right here. And that was the level that we had on the bottom was 516, right? Spike base. So that's what we are doing here. You have 2 distributions. The next day you came back, which was here, right? We came and tested it. And do you guys recall we were live and we took the short?
Yeah.
Yep. The idea was we identified the zones, we identified the split where they're saying, and then I said, hey, they're gonna come back here. We opened, we auctioned higher. If you guys remember, we peaked above the IBH. You guys remember this? We came back, and then the D period had what? What is this here? If you're new, what is this here?
Single prints.
Selling tail.
Yeah, that would be a selling tail. So if you look here, the D period also gave you something that I mentioned to you guys a lot of times. They give what?
Expansion to the C period.
It was an outside period. The D
Outside, yeah.
period was an outside period, and then I always tell you if you're gonna play an outside period, you could play it how?
Retest of the mid.
Continuation.
Yeah, you can play it on a break, and then you will keep your stop loss here, or let's say you're more confident and more risk averse, you put it on top. Higher chance it's gonna work out. You're giving a little bit more risk, especially if it's a wide outside bar. But they shouldn't be cracking 50% of that outside period if you're taking that short. Now, that would have worked out as well, right? But this was our short based on the lesson of market profile and double distribution. We took that short and we targeted 16, the low of the prior day, right? We targeted, but also something happened that we just talked about. What is it?
Unfinished auction that was there,
Or low.
and initial balance.
Yeah, that was our initial IBL. And also remember me screaming, we want them to go higher, let them go higher. So we can short it all the way down and fix the poor low. And that was our target. Our target was like 1675, and that's what we were targeting, which was the low of the day here for right here. And they came back there, and then of course they had a spike. I'm not gonna go the next day because I'm just focused on this setup. Does everybody understand why that setup and how to play it? You identify where you're gonna take a short in those single prints, and then the next step, you're like, I need to identify my risk. The way I identify risk on these double distributions, I typically like to put them up top. When I took that trade, I told you guys that my stop loss was actually 74.75. Do you guys recall that? It was somewhere around here. It was like here. And I was targeting the bottom here. It was something like this. Was that a bad trade?
Nope.
I mean, the odds that they would take me out of this trade were minimal to none, right? And all you had to do is be patient to hit the spike end. I'm sorry, not the spike end, the poor low. And they eventually executed. So is there anyone that's confused on how to play double distributions? So identify the zone, look for stop loss first, where you're gonna place it, right? Usually you wanna go above the period that hit that single print zone and add, sometimes I add 3/4 of a point, depends on volatility. VIX was down, so I think 3/4 was appropriate above this level. Then I rely on market generated information to that, so they see if there's any levels that I should be aware of that I can target. In our case, it was what? A poor low plus, prior spike end. So there was a lot in it that if they fail, that they were going to continue lower. So the psychology of that trade was, we have the spike base, we went above it. What do we want them to do on the spike base? What did they have to hold on this day?
$43 level.
Yeah, they had to hold 43, guys. That was our spike base, because that would mean that they rejected this price lower, and then it would be, if they found a lot of buying here, then we would have been like, okay, crap. Then you can lower your, entry and maybe be in the money to minimize it just to protect yourself. But once they went below it, they're still in the bearish zone here. They're still in a semi-bearish zone, which was here. And look where a lot of price action happened. All these periods mean that time was there, so they spent a lot of time in the bearish zone. They went above and they got quickly pushed down. So the odds really increased that they're going to clean this up and give us this nicely, like 40 points or whatever that was. Okay. Any questions on double distribution? If you do, it's good time to ask now.
I've got a question on outside periods.
Sure.
Would you think it would be kind of a, let's say you want to do one ES, but the outside period's kind of wide? Would it be better to, what do you say, do MES and kind of gradually size in, or?
Well, I think you have to manage the risk for your account size first. If I was to take this trade, let's say on the bottom of this D, you know, and then you have to think about, if you think about the risk to reward, if you took this trade on the bottom and you're targeting, let's say this is your stop loss on the outside, well, I mean, I don't know if this would be the trade you should take with one ES.
No.
Size up. You're not making much for your money. It's 1-to-1 trade, and that's not going to keep you in the game for long. So, you know, when it's a limited risk to reward, you don't want to size up too much. At least I don't. All right. So I would proportionate to your size, I would minimize my sizing.
Okay.
Yeah.
What's an outside period? Is that outside of initial balance or outside of the previous day?
No. So outside period. So if you look here, just delete this. Look at, for instance, look at the C period here. You see the C period?
Yeah.
The high and low of C period are here. And then look at the D period. It went above the C, went below the C. So the next period, when you break the low, high chance you're going to continue in that direction. And, you know, they cracked it, and the rest of the day, what did you do? You continued in that direction. And this happens usually, I would say, between J and L periods towards the end of the day. We usually get some outside periods. For instance, you guys see one here?
The F period.
There's an F period, and now test it. Once you crack the F period, would you have been successful in this trade?
Yes.
You would have been pretty successful. Where could you put the stop loss if you took this long here?
You could put it at the midpoint or below the S period.
What about this right here? Why would I put stop loss like right here?
Because if we break E, we're going lower.
Yeah. Why?
Because it's breaking outside the wider.
But wouldn't this mean access low for now? Wouldn't this be the access with two periods below? So if you can crack this, what is likely that you're gonna do to the F?
Yeah, next one.
Crack the next one. Yeah, I see.
And you would crack this, and you would continue lower. So you can use the access low of these periods that are created if you're taking this long to put your stop. I usually would add not much like below this, because if you're gonna crack this, you're gonna clean this. So I usually give them a quarter of a point or even identical stop loss here. Usually
From there
quarter would do
also.
it. Yeah. But you see that would have worked. I mean, they would have went, and you see how they went. I mean, if this was our, I hate this thing. If you took this long here, how would you know what to target? Well, I like to, if I take just the POC from this area to here, where do we reject?
POC.
You rejected of the high volume node of volume, POC. So you came back, and that's usually a good one to play it that way. Because if you guys remember, in volume profile, accumulations play a big role, right? You accumulate a lot of volume, and that balloon bursts, and then it goes in that direction. When you come back to that level, there's an expected behavior to protect or, right, your position. So what they did here, we accumulated in this area. This was your value if you look at it, right? There's a lot of, I don't know if, let me split it. Yeah, exactly. Look, this is your value area low, this is your value area high. So this orange box, I didn't even honestly see the labels. I was just going off of candles. So if you look at it, the accumulator here, they came to the POC, to the fair price, and they're like, yep, your price needs to go lower. So does that Makes sense, the double distribution. And I call these out a lot, guys, because this is probably my favorite setup.
Hey, Shorty,
Is
can you
anyone
hear me?
confused on this one? If there's one setup you should not be confused about, is this one.
Yeah, I had a question. Can you hear me?
Okay. There's
Do
another
you normally
example
play?
here, if you're more risk averse, add more TPOs to your double distributions. That means you will not have as many trades, because not every time, typically it's 3 TPOs that they hold in distributions before they go down. If it's a nice, perfect double distribution, right, where you have a bunch on the top, and there's some that we've had, right? If you guys even just turn on your VRVP here, for instance, and you zoom out, watch now what happens. I'm just gonna delete this for a moment, so you guys. So was this not a double distribution here? In terms of cumulative profiles?
Yep.
The accumulated sold off, and if you're thinking logically, this is an LVN, and then high volume nodes all the way 5240 starting at 60s, right? So, market creates these distributions and liquidity pockets on volume profile a lot. I would say high chance we're gonna be here tomorrow. Okay.
Hey, Shorty, can you hear me?
No.
Okay. Shinobi had a question. I don't know if you heard it.
No, I did not hear it.
Shinobi, what's your question?
Yeah, I was just gonna ask him, does he play the double distribution from the previous day more than like if it was happening intraday?
Did you
Say it
hear
again,
that?
Shinobi. No, say it again, Shinobi. I had you muted for a different reason, if you recall.
Oh yeah, it's fine. Do you normally play the previous day double distribution instead of like if it was happening intraday?
I play them equally. When
Oh,
it's
okay.
intraday, usually I play those first tap.
Okay.
Intraday double distributions, I like
First
to
tap.
play first tap is my go-to. Why would that make sense? Why do you guys think the intraday double distribution is important and play first tap?
Well, if sentiment is strong, the first tap should be the only tap in separating the value. If they go back to it, they weren't as confident, and it won't like it. You know what I mean?
Yeah, so let's take a look at it. So if this is my zone, and so you see the A and B, right? It didn't really create a double distribution here, but let's say you go lower, wouldn't this be a little bit of a single print here? Can you guys see it, or isn't this a single print here?
Yeah, it probably was. Yeah, or yeah, it is.
Yeah,
It
I
was
know
probably
it is.
even lower until it came back.
Exactly. So if you go here, and I lower this, so here's your double distribution here, right? I'm sorry, single prints right here. So when they did this, what is the market telling you here at that time? And this is where I said in the beginning, market does this live, and sometimes people don't see it because first, your competence in understanding the market profile is not there. I would say your competence and your confidence go in a linear relationship. And if anyone wants to disagree, I'd like to hear your argument, but there's really no argument to it. The value was being built initially here. Then they created another value that was being created here, right? So they went emotional and they started selling off, and then intraday Shinobi, look what they did. If they agreed on this value here, look where they came back. It's pretty good retest for rejection, right?
Yeah, makes sense.
Yeah. So intraday, I really like the first taps. When it's a next day, if we haven't visited that zone or close to it, I like to take that first as well. But if the auction looks strong, right? Let's say we open the next day and you have A period, B period stacking higher, C period. Well, if they come into a double, like a split zone, I wouldn't mind going above and then you fail. And then I take you. Because then what would that tell me? We tried inside, you got rejected. Well, instead of me being the price discovery tool, I'd like to wait and kind of jump in with the strength. Good question, though. Shinobi feels confidence now that he's won the Orb Life to ask questions. That's good. Okay, does this make sense to all?
Yeah.
Okay. All right. The next thing is spike. Before talking about it, is there anyone that doesn't know what spike is? Everybody knows what a spike is.
Wouldn't hurt to go over it again.
No, I won't do it for
I
you.
have a question on it. I don't.
Okay.
I
I want
I
new
know what it
people
is.
to
but-
answer. Raj, do you know what that is? Texas?
Yeah, it's in the M period. It's single prints.
That's correct. Trav QP, what is it?
The end period is the
Give me a
last.
different explanation. Yep. Go ahead.
Wait, what kind of explanation you want?
I don't want the same one that the person gave me earlier. What Texas Raj gave me, the end period single prints. Explain a little bit more.
Oh no, the spike would be the Oh damn, you put me in the spot. Hold on.
That's okay. That's why I'm here.
Would it be a selling tail or a buying tail?
M spikes are not buying or selling tails because they have to be validated the next day. I was waiting for somebody to ask that. We talked about it briefly earlier. So when you see an M spike, that cannot be a selling tail. That's why it's called a spike, because we have to verify it tomorrow. It gets carried forward the next day because each period verifies the next period, right? So M period is the last period for the day. And if it happens, that's why we draw the spike zone so we know if that becomes a tail. You won't know at the closing if it's a selling tail or buying tail or selling aggression next day. That's why we draw the spike base, spike end, where we open and how we auction. If you, let's say we have a bear spike zone, which we did, and we'll go over it now. So this day here, if you saw a profile, I'm just gonna hide candles. I really don't need them. If you saw this profile here, you saw this profile here, you would say that we have what? Access.
Access low?
This would be access high for this profile because it was mean a lot of inventory up top and we met the sellers, so they pushed the price. And this would be called what?
That's a selling tail.
Good job. That's a selling tail. This is our selling tail. That means that they are not interested in price higher. And this means that other time frame sellers joined us. And why do we identify this is simple. So think of yourself and me as we are in a little Mini Cooper car, and here comes a person with a, F-350 7.0 engine, and they're like, hey, let's play tug of war with the cars. The odds that you're gonna do something with your Mini Cooper or me on pushing the line on that tug of war between that truck and you is what? Minimal. You're not gonna do a dent. You're just gonna separate that Mini Cooper into pieces, right? So when you have other time frame participants, we want to be aware. Because would I put a buy limit right here to go long?
No.
I mean, it would be the dumbest thing I could do because this guy is just telling me, hey, price came here and I have a lot to sell. I'm not gonna be looking to buy anywhere close to here. This guy's pretty aggressive. The longer the TPO is on the top, what does that mean about seller?
More aggressive.
More aggressive sellers, right? When you see that, your B period cracks the A period in a quick fashion, like it did here, is it really a day that you want to be buying the dips? Let's look at it. You guys know a rule about C, do you? Or not a rule, I would say a tip. So you have your
that's
initial
the
balance.
direction for the day.
Initial balance makes up A plus B period. Sorry, and that's what I forgot to mention earlier on the base applied here. The initial balance is whereas initial balance is basically your A and B period. The first 1 hour, 9:30 to 10:30 Eastern. That's your initial balance. The C period does what?
Tells you the direction.
It can tell you a clear direction of the market. If the C period drives lower and C period closes below the IB, what does that tell you?
Usually a downtrend day.
It's usually is, it's a pretty big word, but usually means the C period is gonna go lower. We're gonna go lower. And here's your C period. Did we close outside? This is your C period here. Where did we close? You guys know how to read candles on red, green? Where's the
closed
close on
outside
this
of the
candle?
B period.
Is the close right here for this candle?
No.
Or is it here?
Yeah.
Yes.
Right there. So we closed outside. And then what did they try to do in the D and E period? They tried to go inside, but what happened? They said no. They basically consolidated below the IBH, and then of course they had a trend day. Was it a boring type of consolidation right below IBL? Yeah, it was tough, right? There was a lot of price action there before because of these guys right here. And if you extend this, look.
Shorty, more specifically, if the C period closes outside of balance, doesn't that mean that A period low was the low of day?
The A period low. If the C
Like-
period, sorry,
Oh,
I'm
sorry.
dyslexic, so I have to visualize it on the chart.
Like if C period closes outside of B period, obviously it tells you a lot in terms of sentiment. But more specifically, doesn't it mean that we are more than likely not going to try to explore outside of like the opposite extreme of the initial balance?
That's correct. There's 80% chance you're not going to. Yep. So what he's saying is that if the C period closes, that means about the setting of the highs and the lows of the days. So do you guys remember the rules about IB? Anyone? Does anyone remember IB, the rules that we have?
Yes, but I want to I don't know if anyone else wants to.
Okay, let's see if somebody else.
Are you talking about like if it goes outside of IB in
That's correct.
30 minutes?
Yep. What is it?
If it doesn't spin a full 30 minutes under or above the IB, it's more likely to go to that opposite extreme, at least
Okay.
possibly that day or the next day.
What about the 88% probability?
It's
You guys
88% chance that it will go to the opposite extreme.
Yeah. Do you guys remember when we talked about, for instance, this right here? If we get the close in C period, let's say we close the C period above. We close the C period here above. Okay. What does it tell you about this right here? The IBL.
It's the low of the day.
Yeah.
The low of the day.
Low of the day by 88% chance. Why does that matter to you?
Because if we revisit that, we can go long.
Exactly. There's a 12% chance that you're going to be wrong. 88% chance you're going to be right. If I was to give you that odds on black and let's say red and black in a casino, I say, hey, if you put red and there's an 88% chance you're going to win, what would you do?
Take
All
red.
in every time.
No, don't go all in. You would play you would do a considerate bet as a gambler on that, right? So if you know how to count cards and you play blackjack and let's say you're not caught, and the count's very favorable, and you have a good card, you want to play differently, let's say, than how you would have if you didn't know that information. So the IBL, IBH, the low of the day, what he was referring to is the same, right? So in this case, the C period, this said that A high here, 88% chance that we're not going to go higher than this. So then what we were looking for is what? Well,
For us to explore like back within the initial balance.
We're looking for short opportunities. If the B period 50% is here, well, we're looking to short and find a short any time here. And then you have the C period also, if you look at this would be the C period. So let's say if you crack below this, you didn't get in here, but once you crack this with the next period, you can take that short. Right? But this was indicating that there's a lot more selling pressure, I would say, because this is your PDL here as well. Does that answer your question?
Yes.
Okay. All right, back to the spikes. I just have to get back on finding it. And it's right here. This is the spike, and I gave you guys a good example on that. I drew a new one here so you guys can visualize a little bit better. So here's your spike that we typically talk about. If price opens beyond the spike, right? So you have the base spike is where the last period high or low was. That's where you would say, oh, M period started the spike at this level, and where the M period ends, that's the spike end. Is that clear?
Shorty,
So
if M period retraces a bit through the process, do we get the end of the M period or?
yeah, the end of M period. That's it. So it doesn't matter what they do, right? This is your base, and if M period was auctioning, this would be your base end. Doesn't matter what they do in between, right?
The range of M period after the last TPO, the L TPO.
Well, it doesn't have to be the L period that's the base. It could be that it's it could be N, right? Let's say the L period was never here, it was here. The M would have been, and A was here as well. That would have been, the base spike would have been here.
Yeah.
If the A high was here, then this would have been a base spike right here.
And the end of the spike would be the last TPO of M.
That's correct.
The highest.
That's correct. So let's see now if this makes sense. I'll let you guys read it, and then you guys tell me if you understand this, because then if you don't understand this, then I'm teaching kind of the wrong way. So I'll let you guys read it without me explaining, because you should be able to read the PowerPoint and know what I'm talking about, right?
It's pretty clear.
New people, does this make sense?
Yeah, it makes sense to me.
Is anyone not following?
Makes sense to me.
So just to be clear, so the M, the spike, it's above every letter to the left to find the base.
Say it again.
So to find the base of the M, it would be at every letter to the left of it where that highest one was, not
That's
just
correct.
L.
That's correct. Not L, any period that's highest or lowest. L period, I mean, if you were to say that, then you would be saying that 3 p.m. to 3:30 candle is going to make a higher or low of the day. Is that true?
Yeah, no. So every letter. Okay.
Yeah.
So Shorty,
Okay.
to be clear, right? So if we had the J, K, and L period all at the same price, right? Then the spike would be where M is below all those 3 periods.
That's correct. So if J, K, L were here, this would be a spike base. What would be the difference? I want to see who's following. What would be the difference between those two spikes? If the J, K, and L had same level, and then we spike base versus this one here where J has a higher low, K has a higher low, and then L has a lower low, right? See how K has lower low than J. Like which one would be more powerful in terms of spikes? The one that has flat or the one that has steps?
Flat would be more powerful, I would assume.
Flat, right?
Flat would be more powerful because a ledge. A ledge, think about it. What does a ledge mean to you in life? I tell you, somebody jumped off a ledge. Like you go
It's
to
a
Ireland, right? And it looks like this, right? And the water's here. You hop, and high chance that you're not gonna have anywhere to save yourself, correct? You're gonna be dead. So here, if you have a ledge that's being built, and then the M period spikes, when you come back to this level, this becomes a much easier, if you want to short this, I would trust it because there's a nice little wall here. Does that make sense?
Right, someone came in with
So
an initiation.
is that the same as they was building support and they
Yeah,
broke it?
they built a support here, right? And it became a crowded low, right? When you break a crowded low, you will come back to retest crowded lows, right? When you retest it, that becomes a good short here.
Shorty, if the opposite would be true, if that all came down, we fell off the ledge and we broke above the spike base, retested, that would be a very strong bullish signal, right?
That would be a very good bullish signal. That would be a really good support to test the opposite extreme of probably value area high here. That's correct. The ledges become support and resistance. So if you fall off and let's say you reclaim it, that becomes a really, really nice support. That's correct. So that's why in this case, let's say if you open above the spike, scenario 1, if you opened 1 is here. If you open below, right? I'm sorry, number 3 is here. So number 3 is here. I read that wrong. Number 3 is here, right? Number 2 is if you open on spikes, we prefer. So 2 is here. If you open below the spike, and where's the third one?
In the middle.
Okay, that would be one number here. It would be 1. 1 is here, 2 is here, 3 is here. 3 means you're rejecting this price action the last period, and you want to go. Typically, you target POC in the value area high. So POC is here, and you would have VA high be here, right? That's how you would play it if you reject. And it doesn't necessarily mean, let's say we open here, and then within the first couple of minutes of the auction, we open this and we're holding this level. Well, you want to be careful, right, on shorting, especially if, there was a ledge here, what Beans was talking about, you're above it, it'd be a tough level to, crack about below. So it might be a nice support to drive further. So that would be your spike. Does everybody understand the poor highs, poor lows? Do we need to go more into it?
We're good.
Anyone not clear on poor highs, poor lows? No? I give you a lot of tips here, and I give you lots of examples here that you guys can read. And guess what? I mean, there's some recently that we had on poor highs and poor lows, and I'd rather kind of bring that up than give you a PowerPoint. So if you guys go here, where's the poor high?
The 27th.
This is a poor high right here, right? You have, when you zoom in, when you zoom in here, you will see that you had D and J had the equal highs. So now you have to think about, how do I play this, right? It was such a weird, you're consolidating in a bracket and you have a poor high. When I say bracket, I would say that you're consolidating, let's say something like this. Or you could say that this was our initial bracket right here. So if you're consolidating here, right, how would you play this? Know that you're in a bracket. And this is our high. And this is our low. How could you play this?
Well, we just play responsive, like responsive buyers and responsive sellers kind of thing.
Exactly. So we talked about earlier, you lost this level and you reclaim it and you're in a bracket. What would you target from here?
Or
POC.
high at least.
Four high.
POC.
You can target the POCs, but I would anticipate that if they get it to the POC, which is a VPOC here, that they're gonna do what?
Clear the poor high.
Complete the
auction. They're at a poor high, right? And that's kind of what they did the next day, right? They came back and cleaned it. And that happens a lot, right? So, and then you look here as well. What about this one here? This one was actually really good. You guys see here? So this day had, I would say, a D-shaped profile for the most part, a little skewed. Then they had the value area low that was sitting here, right? And was the value area wide or narrow?
Narrow.
Okay. What are the odds play out 80% on narrow value areas?
High.
High chance.
Much higher, right? But you left a poor high here, right? You have access low and you have value area low. So the next day you opened where? Where did they open in relationship to these 2 days?
Above value area high.
Okay, so let's take a look. You opened above, the B made higher, and then the C period cleaned up this here. So you could have played the beginning of it, right? And played this spike, but then look in the bottom. They played the 80% rule, and where did they find the buyers? At the value area low of that day, right? So they're telling you for a moment they were happy in this 2-day balance, but they cleaned it up perfectly here. They opened and then cleaned it out immediately. And usually when they clean it, they like to make sure it's completed. I would say that this made sure that this poor high is what? Because it left what?
A sell into.
Well, really nice excess low, really aggressive. And then they also left an F period with what, 3-4 TPOs here. So far they're building value, right? They're trying to accept the value here. And the second value was being built here. Somebody's watching the games. Okay. All right, so that would be the poor highs, poor lows. I gave you quite a few examples to read them. I would say go ahead and read it. Trading inventory, this is, I would say, don't worry about it just the first day that you learn about this, but this is what the end period means. It's your settle price for 415 and nothing more to it. And we determine the inventory net long, net short from it. If you close, for instance, let's look at the, the latest. If you look at this day that we just had in the lowercase b, so where's our close price, right? It's right here. It'll be this candle right there. So this is our settle price. So tonight at 6 p.m., let's say that we go from here, we start trading here. What do you say about the inventory? Overnight inventory is what?
Net long.
Net long.
Net long. What they like to do to those overnight longs is what? They like to rebalance the inventory and they like to crush them, right? And they will come back to a significant level. And the same can be said if they were opening, if we are here, that means we're net short. And if we are going to go in a direction of short, What they like to do is get these guys out and they bring it back up and then they short from here. These guys go long here, then they go short. So that's kind of what that slide, because a lot of people were confused. How do you know that? It's fairly simple. Like this is what you care for. Okay. Then you have the date types. I honestly would think that most of you guys would have this printed out and like at least know. I can tell you each one of these by heart and their kind of characteristics of the day. And the best way you're going to learn it is not me reading this, but it's you going to the each day and trying to figure out which one is what so your eye can recognize it. So I don't think there's value in me reading each one of these and telling you, but I think if you're to do this and do some homework, normal days, what does it look like? Follow each one of these bullets and identify the days so that your eye can kind of spot them in the market. I think that would be your best scenario of learning the days. And once you identify the days and the relationship between days and value areas, I think you're 50% better trader than you were the day you did not know this compared to the day you didn't know it. Knowing the date types really, really helps you. Okay. So some homework there, and then the date type confidence, right? This is important because, you know, based on the date types that you have, which one drives the most confidence, right? Trend days have the most confidence. Double distribution trend days are up there, and I like to play them. Normal variations are good days. Some of you guys might fail for the traps. And then you have the normal days, which are, I would say we spend a lot of time in that category here. And then you have the neutral days. We have extensions on both ends. When you go above the IB and below the IB, that just means that you don't really have conviction from other time frame buyers. So neither one of them won. And usually that means the short term is in control. And short term people like to trade how?
From value area high to value area low, or vice versa.
Exactly. So if you see that, then it can tell you quickly, this is how I should play this day, right? So that's why it's important to kind of pick up these day types and see their behavior so you know how to play it.
So with the day types, are you trying to identify the current day type as the day's going along and then use that to help you?
Exactly. I try to develop, let's say yesterday we had a neutral day. Let's say we had a D shape yesterday and we open right inside of it. What are the odds? And it's a wide balance on that, let's say D shape. What are the odds that we're going to have another neutral day?
Higher.
Yeah, much higher, right? So date type, the value area width, tell me, you know, what are the odds, and where you're opening, tell me what's potentially you're going to have. Let's say you have a neutral day and you closed at value area low. What does that tell you? It's a bearish extreme day, right? It's a close on a day that might lead lower tomorrow. So what I would watch in the IB tomorrow is, does the A and B period break out of that lows of that neutral bearish day? If they do, then most likely they might lead to a trend day. And the trend day width would be, if it was a wide balance of that day, it would be at minimum the balance of the value area that they had there. So then I could know the targets off of that day.
Hey, Shorty.
Mm-hmm. What's up?
Is there a day that is the easiest to read, like intraday? Is there a specific day that's easier than other days?
To trade? Or to
enter
read?
trades on, like to, you
Well,
know,
I would say
easier to pick up.
I would say the you know, the D shapes for me are probably the most easiest days. You don't get D shapes usually don't carry a wide balance. It's usually a normal range in an average about 24 points, 25 points, and that means you're most likely going to be shorting the tops, buying the bottoms, especially if you're opening inside the value of the prior day. If you don't see extensions happening and you open inside value area, high chance you're going to consolidate that day and have a D shape, and then you short the tops, buy the bottoms.
Would you close the trade at the POC?
Yeah, well, I would trim, especially if I have, let's say I have 3, I would trim to keep 1, ride the rest.
Gotcha.
Yeah, I usually like to make more money on my runners than the initial ones, because it protects me pretty well. I mean, if I have a 10 pack and I have, I short a value area high, and let's say the POC, the shape was D and the POC has a, let's say 10 points in between, I would take 80% of that and keep 2 for the value area low run.
Would you adjust your stop on the runner?
Oh yeah, I would put them in the money. I usually put it where I usually don't look to, minimize my, like trail it like by a point. I wouldn't do that. I would just break even on those 2. So basically I would have made on the money on the 8, but the 2 would have been 0 impact.
Okay, gotcha.
Because I really want to make more money with those 2. So if I keep a trailing really close, the odds of me getting it are much lower, I would say.
Do you have like a time where you or any kind of I don't know like bias or rule where you move your stop to break even?
I do. So if in the morning, if I make my money, let's say on the first 2-3 trades and I'm good for the day, then if I'm scalping to add, I say add to the pile, add to my existing profits, then I usually, if I'm scalping for, let's say 3-4 contracts or even 1, and I'm up $100, let's say total profits 250, I will cover immediately 150 in my trailing. Because what happens
Okay, yeah.
psychologically is that people that make, let's say you made $2,000, it's 9:40 a.m. And they're like, oh man, I want to double this. I want to make 4. I don't have that mindset personally. If I
No, me
make
either. I'm not
2K,
trying to give it back.
I learned a lot of times when you're greedy that your bias gets really thrown off, and the greediness and ego kick in, and you really fuck up and you give them all back. You go from 2K to negative 4K, so your swing 6K. So that's why I came up with that. When I'm good in the profits and I'm scalping, and you guys will hear me, I took $200. I was up 300, 200 was good. I'm out. And then I just repeat it 2-3 times if I can. I lose 200 or lose 50 on a trade. I usually don't, on those scalps, I don't like to lose more than $50 to $75. Because I know I can make 100 easy, but I don't like losing more than 100 ever on those scalps.
Yeah, I've been moving my stop too when I'm in profit, but I'm just wondering if I should or shouldn't do that, or what you did.
Well, it depends on sizing, right? If I see a clear setup that, let's say, we took the initial trade and then I see a setup that we can run like we did. I don't know if you remember that 25 level. The 54.25 was a SIG 1 level. I can bring it up. Let me bring it up here real quick.
I think so.
So like this level right here, do you guys remember this trade? We took this trade on Friday. You
Oh,
guys
the
remember
short,
this?
yeah, I took it 67 to 25. Yeah, I took that.
Yeah. So I was done, here. And then this came, somebody actually mentioned it. Should we short IBL? I'm like, yes, if they bring it back up. And remember, we had this huge spike candle that literally happened, I would say, like really, well, 6 minutes. They drove
Yeah,
it
it
to
looked
IBL,
bullish.
and I was like, wow, man, they just gave us an entry. And I didn't anticipate they would. So when they did, I'm like, okay, well, I'll take it. That means you're most likely going to go to the 25. I wanted 0-1 that day, but I was like, man, I'll take this trade. And it was a perfect 3-1 trade. So I definitely took that, right? And that's where a trade where I took it and I didn't move my stop on this one. Because for me, it was clear that they wanted lower. So here's your initial balance, right? They came in. I was anticipating that they're going to hit this. I don't know if you guys remember. I kept screaming for 401 and of course they did that after hours.
Yeah, see, and that's one where I did move my stop, and I had already made money earlier in the day, and that, on that one I moved my stop, and I ended up getting trailed at like 600 instead of the 1K plus that it would have been.
So there, I would let them have it. And usually, you know, my entry was I think it was, don't quote me, I can check my log, 63 3/4. I think it was somewhere around here that I got it. In this area.
I think you said 67, that you were in at 67.
I don't think I got 67. Maybe I did, but I'll check. I thought it was 63 3/4. I can check the log and see, but let's say 67. Once it started going down, I would just move it a few points in, so that way I can't lose it, but I wouldn't trail, if that makes sense. I wouldn't go aggressively after.
Yeah, that's what I made a mistake on. Yeah, I trailed it too aggressively.
I mean, it was a very boring. After this happened from 11, afterwards it was really difficult to trade this, like right here. Okay. All right, guys, I think this will be a good stop. I'll post the PowerPoint right now and I'll link it for you guys. You can have it. I do suggest you guys go through the days at least and cover it from there. And then I'll see you guys tonight at 9-ish. We're going to do the market prep and see what the market does tomorrow. I'll trade live as well.
All right. Thanks, Shorty.
Thanks,